Hey crypto friends, for those of you who are new to the channel, my name is Garrett and I am a crypto day trader whose overall goal here with my channel is to simply help other traders in the most simplistic ways as possible. So in today's educational video, I'm going to be showing you all exactly how I personally short the crypto market on the smaller time frames like the 15-minute charts. Now, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so we are just going to dive right into this video and we're just going to go for it, all right? So this is how I personally short the crypto market, all right? The only indicator I really use is the 7-period SMA, all right? So if you want this indicator, you're new to this channel, you've never seen me use this indicator before, you want to go to indicators up here, and you want to type in moving average simple, all right? It's just a simple moving average. You'll click it, and it will add to your charts, all right? Then you'll go to the top left-hand corner, you'll find it, SMA, and you will go to the gear icon. And I think by default, I think it'll be set to either 9 or 14 on the length. Change the length down to 7, all right? Change it down to 7, and then you will be good to go, all right? So once you've got your SMA all lined up, you're going to pick a coin, whatever coin you want. I always choose Solana because I trade Solana on a regular basis because it's always got a very high amount of daily volume, and the chart is always moving either up or down, whatever. I trade both directions, both long and short on a regular basis, so it doesn't really matter to me which way the market is moving, all right? So here is how I go ahead and do things. The very first thing I do is I draw my support and resistance levels on either one to two time frames higher than what I am trading on. So since I am trading on the 15-minute charts, I'm going to go ahead and draw my support and resistance levels, or my large support and resistance levels, on the 4-hour chart here, all right? So let's go ahead and mark some of these out. So we've got a resistance level right there. Let's see here, we have got a very big support level way down here, and then in between we have got, let's see here, this is the most recent one, so we will use this one. We've got support down here. It looks like we recently created some support down here in the previous 4-hour candle. And let's see here, we have got some small resistance up here as well. All right, so we've got some resistance right in here. All right, so we are good to go on that. Yeah, I'm not going to put another one down in here because price action probably won't go down that far right now anyway. So now we will go ahead and move to the 15-minute charts, all right? So once we are on the 15-minute charts, what we want to be doing here, or what I usually do here is hold on, let me go ahead and make my chart a little bit smaller. What I usually, well, you guys probably can't see it, so I'll make it a little bigger. Sorry. So what I typically like to do here is now once I'm on the 15-minute chart, what I'm going to do here is I'm going to draw out some of the most recent local support and resistance levels. Okay, so based on where price action is currently sitting at. All right. So where price action is currently sitting at, local support and resistance levels. Let's see here. We have got a level right in here. And we will change these to a different color. So we've got one right there. We've got one right up in here. And then in relation to where, and you guys can clearly see price ended up going all the way up to this exact level right here, back here, when price action was back here. And then we will go ahead and mark out some support levels. So let's see here. We can consider this a support level. And then we can also consider right down in here, yeah, we can consider that a support level, especially considering that's the top end of this wick right here as well. So the top end of this wick right here is also the very bottom of this wick when we started going upwards as well. So that is a local support level as well. And we will also go ahead and we'll mark, this one's probably better right here, so we'll probably mark this one as well, all right? So what we want to do here, or what I like to do here now, is I'm going to be looking for, what I want to be looking for now is I want to be looking for price action to cross or start coming down or failing at one of these levels, whether it's a larger level or a local level. I want to be looking for price action to reach to that point and then reject it to the downside, all right? But obviously, as you guys can clearly tell right now, the overall trend on the 15-minute chart is currently bullish right now. So I can't promise that that's going to happen within the next 5 minutes of this candle that's currently going on. So I got to move on with this video. So I will show you an example from a previous movement, or from a couple previous movements, and we will do things that way because it will be much, much easier. So let's say we're going to do this downslope right here as an example, and we're going to do this downslope as an example as well. All right. So given that, let's see here, all of these support and resistance levels would still exist even without this price action right here existing. Okay. So what we are going to be looking at here is we're going to be looking at the crosses of the moving averages, okay? Or of the moving average that I've got open here, all right? So when price action crosses over to the downside, it typically means that, you know, there's bearish momentum starting to come into play, and, you know, price is going to start probably moving to the downside. And 9 times out of 10, when price is bearish, price action is always underneath the moving average here. When price action is bullish, price action is always on top of the moving average here, all right? So we get our cross over to the moving average into bearish territory right here. Then the next thing I will end up doing here is I typically wait for confirmation, all right? My confirmation is going to be the next candle opening, all right? When the next candle opens, if the next candle opens and starts to continue going lower and it goes past these previous smaller levels that I would have had open, for instance, obviously right in here when price action was right here, none of these would have existed yet. None of these support levels right here would have existed yet. So instead, I probably would have had a support level right around in, let's see here, probably right around in this area, all right? So I would have opened up a short right in here. One, because it confirmed, my first confirmation was changing over to the bearish side here of the moving average right there. But on top of that, even though we didn't technically reach the support level yet, the price action continued to move down further and further rather than continuing, or rather than starting to go upwards and starting to create a bigger wick up to the upside, all right? So that tells me that I could get in right there, and then you end up riding it all the way down until price action deviates far away from the moving average right here. So once it moves very far away from the moving average, that tells you that, you know, eventually price action is going to start reversing and start heading towards that moving average again, all right? Because the moving average is like a magnet, all right? Price action always wants to be close to the moving average. So when it gets far away from it, it's eventually going to start moving towards the moving average once again, which, as you can see right here, that's exactly what it did, all right? And the reason why it goes past or back to the moving average is because people are starting to buy more, and people are starting to buy more because they think that's a local bottom and they think it's going to reverse from there. So they can start buying. Price action ends up going all the way up to or towards the moving average once again, and it's either going to reject the moving average or it's going to breach through it and start going higher, all right? In this case, it rejected it and went down a little bit lower, all right? But if you were to have ended up trading this one and you got in right around in here, you would have ended up profiting and going all the way down. You would have ended up profiting roughly around 1.14%, all right, within 45 minutes of trading. But if you were using like 10x leverage or something like that in the futures market, that would have been roughly a solid 11% profit right there. And that's pretty damn good profit for just trading for 45 minutes, all right? People in the TradFi markets would love to be making 11% every single day, all right? So 11% in 45 minutes of trading is a darn good profit margin, all right? So now we will go ahead and we will move on to this other downslope right in here. Now, at this point in time, we do have these resistance areas marked out already, all right? But we do not yet have this level marked out yet. So I will go ahead and delete that. But we would have had this bottom to look at. So I will go ahead and mark that bottom. So when we are at this point, again, it's the same concept. Price action ends up going below the moving average, which tells us momentum is dropping, all right? Next candle ends up opening up green, but it does not go up to the moving average. So that tells us that overall we're still bearish here, all right? So I would have gotten in on that candle because, again, my confirmation right there would have been the fact that price action did not go back up to the moving average into bullish territory. It stayed underneath in bearish territory. All right. So I would have gotten in probably somewhere right around there, and you end up riding it all the way down, down to this support level. All right. Because we have this support level mapped out from a previous, from a previous wick that went down there. All right. So again, this is about 0.73%. With 10x leverage, you would have made roughly about 7%. 20x leverage, you would have made roughly about 14%. Within like an hour and 15 minutes of trading right there. Now, I know a lot of you might be watching this and might be thinking, that's not enough profit. That's not, that ain't shit. But realistically, when you really think about it in the grand scheme of things, that is a lot of profit to make in just a simple 1 hour and 15 minutes, guys. I mean, it really is. All right. The problem here is crypto Twitter has realistically ruined profit margins for a lot of people and has, made people very, very, very greedy, especially when they see influencers posting profit cards of like, 100% profit, 100% profit made within 6 hours or something like that. And that's great and all. But those influencers, one thing you have to remember is those influencers, they have years and years and years of experience trading this market, all right? They have years of experience, and on top of that, they are confident in using much, much, much higher leverage, all right? So if one of those influencers was trading this setup right here, and they were trading that, and they were using, for instance, 100x leverage, they would have made roughly around 87% right here. All right. They would have made 87% within this 1 hour and 15 minutes. Okay. So that's kind of overall what I'm talking about here, as far as not being upset about these little profit margins or smaller profit margins, because at the end of the day, these smaller profit margins, they add up overall. So if you have like, obviously within this day, you would have had this short and this short that you would have profited on, and between these two shorts you could have made roughly around 30 or 40% profit within just, obviously, let's see how long that would have taken. 30 or 40% profit within a matter of, 6 hours and 45 minutes. We're just going to say 7 hours of trading right there. So realistically, that is a very good solid day of trading right there. All right. So overall here, guys, my strategy is very, very simple to use if you understand it. But if any of you guys have any questions about it or anything like that, feel free to go ahead and reach out to me on Twitter at Garrett_N_stuff. Feel free to ask me any questions you like. I love helping people. It's what I do best. So feel free to go ahead and reach out to me, and I will do my best to help you in any way that I possibly can. But before I go ahead and wrap up this video here, if any of you guys enjoyed this video and you feel like you got some decent value out of it, please be sure to go ahead and subscribe to the channel. Hit the like button below the video. Leave me a comment below on your personal thoughts of this video. And with that said, for those of you guys who stuck around and watched this video throughout the whole thing, thank you guys very much for watching. I appreciate all of you, and I hope to see all of you in my future videos.